Hello, welcome to Market Square, your go-to show for deep insight into business and economic trends. I'm Olaitan Adebayo, and today we are diving into major stories shaping Nigeria's economy. Stay tuned. Welcome back to Market Square. Let's get straight into it. According to the latest data from the National Bureau of Statistics, Nigeria's headline inflation rate fell to 23.18% in February 2025, down from 24.48% in January 2025. Food inflation in February was recorded at 23.51%, a significant drop from 37.92% in February 2024. Month-on-month food inflation rose by 1.67%, indicating that while prices are still increasing, the rate of increase is slowing down. Excluding volatile items like food and energy, core inflation was at 23.01% year-on-year, down from 25.13% in February 2024. Month-on-month core inflation stood at 2.52%. Urban inflation was higher at 25.15%, while rural inflation was 19.89% year-on-year. Month-on-month urban inflation was 2.40% and rural inflation was at 1.16%. The Center for the Promotion of Private Enterprise has attributed the slowdown in inflation to key factors, the base effect and the stabilization of the macroeconomic environment. Despite this decline, concerns remain over the rising cost of essential commodities across the country. The drop in inflation could signal improved economic stability, but it does not necessarily translate into lower prices in the immediate term. Instead, the slower pace of inflation means that prices are rising at a reduced rate, offering some relief to households and businesses struggling with high costs. While the inflation drop is a positive sign, true stability will require a strong naira, better food security, and long-term economic reforms. As part of efforts to strengthen the economy and enhance food security, Nigeria has signed a $1.1 billion agricultural deal with Brazil. The partnership is expected to boost food security, drive agricultural productivity, and strengthen private sector investment in the country. In a statement released, Stanley Nwokocha, Senior Special Assistant to the President on Media and Communication, highlighted that the GIP will enhance private sector investment in Nigeria's agricultural sector. As the largest agricultural initiative on the continent, the project prioritizes sustainable low-carbon farming, practice to improve efficiencies and competitiveness. The Green Imperative Project, first initiated with a Memorandum of Understanding in 2018, is part of a broader $8 billion investment, including a $4.3 billion second phase and a $2.5 billion JBS agreement signed in Brazil last year during President Bola Tinubu's official visit. Speaking at the presidential villa in Abuja, Vice President Kashim Shettima described the deal as vital to the Tinubu's administration economic vision. He noted that it will connect small-scale farmers to robust agricultural value chains, driving efficiencies and investor confidence in Nigeria's food production sector. Brazil's ambassador to Nigeria, Carlos Garcete, underscores his country's commitment, pointing to lengthy negotiations with banks to secure funding. The project includes importing tractors and spare parts for local assembly, promising a significant lift to Nigeria's agricultural landscape. This initiative is a big step towards improving food production, farming, and investment in Nigeria, and here's why. For smallholder farmers, this project could provide better tools, training, and market access, helping them to grow more food and earn higher incomes. With improved farming techniques and equipment, productivity is likely to rise, making local food more available and affordable. In the long run, as food production increases, food prices may stabilize or even decrease, easing the burden on consumers. However, successful execution will depend on how well the resources are well distributed and whether small farmers truly benefit from these investments. If properly managed, this initiative could reduce hunger, improve rural livelihoods, and make Nigeria more sufficient in food production. By involving private sectors, the GIP will also bring about new businesses, more jobs, and economic growth, especially in rural areas. Despite efforts to improve economic stability, Nigeria's power sector remains a major concern, with persistent blackouts affecting businesses and households. Nigeria's power sector is facing a deepening financial crisis, with the federal government settling only 20% of the 1.9 trillion naira subsidy debt owed to generation companies. This shortfall has triggered warnings of potential shutdowns, further straining countries' already fragile power supply. The sector continues to grapple with weak revenue collection, inadequate metering, and high losses, with distribution companies struggling to remit payments. Recent data from the Nigerian Electricity Regulation Commission shows that in Q3 2024, out of 7,606.8 gigawatt hours of energy offtake by discos, only 6,249.2 gigawatt hours was built, translating to a billing efficiency of 82.2%. Revenue collection remained a major challenge. Discos collected 467 billion naira in revenue during the period, significantly below the 626 billion naira billed, resulting in a collection efficiency of 74.6%, a decline from the previous quarter's 79.3%. As a result of this shortfall, Disco could only remit 370 billion naira of the 441.7 billion naira invoiced to them by the Nigerian Bulk Electricity Trading PLC and the market operator. In response to the revenue shortfall, the federal government has announced plans to increase tariffs for Band B customers who receive 17 to 18 hours of power supply from 63 naira per kilowatt hour. Band A customers who get just 2 hours more of supply are charged 209 naira per kilowatt hour, raising concerns over tariff disparities. The power sector is losing money because people are not paying their bills. Many don't have meters to track usage, and a lot of power is being wasted or stolen. Because of this, discos cannot pay money to people who supply their power or fix their equipment, so the power supply keeps getting worse. This affects businesses and families. If prices go up to cover losses, things like food and transport could even become more expensive. If nothing changes, things could even get much worse. To fix it, they need to put meters in everyone's home so that bills are fair, repair old wires to stop power leaks, stop people from stealing power, and make it easier to pay bills. In a move to address infrastructure gaps and drive economic growth, Dangote has announced plans for Nigeria's largest port at the Olokola Free Trade Zone in Ogun State. The project aims to improve trade, reduce congestion at existing ports, and create new job opportunities, positioning Nigeria as a key player in regional logistics. During a meeting with the Governor Dako Abiodun and the State Executive Council, Dangote revealed that the project will revive previously abandoned projects in the area. In addition to the port, Dangote disclosed that 2 new cement production lines with a combined capacity of 6 million metric tons per year are currently under construction in Tori. Once completed, these facilities will operate alongside the existing 12 million metric ton plant at Ibeshe. Dangote further highlighted that Nigerians account for 70% of the company's total cement production across Africa, with the Obajana plant in Kogi State producing 16.25 million metric tons annually. With this development, Ogun State is set to strengthen its position as a key hub for industrial and economic growth in Nigeria. Dangote's plans to build Nigeria's largest port and expand cement factories in Ogun State could boost jobs, trade, and economic growth for Nigeria. The new port could make it easier to export cement and other goods, bringing in more money and helping the naira. It would also create jobs in construction, running cement plants, and moving goods. Since Nigeria already makes most of Dangote's cement for Africa, having more factories here could boost constructions across the country. However, if power issues or high costs continue, the benefit might not be as big and the average person may not feel much change. For Ogun State, the projects are a big deal. The new cement plants will add 6 million tons to the 12 million tons already produced in the state, making Ogun State the largest cement producer in sub-Saharan Africa. This could attract more business, especially builders, and put Ogun State on the map. The new port could also bring in more companies because it is in a free trade zone, offering tax breaks. If everything works out well, Nigeria could see more jobs and growth, and Ogun State could become an industrial powerhouse. But it needs reliable power, stable costs, and benefits that reach more than just Dangote's company. And that's it for today on Market Square. Stay tuned for more updates on Nigeria's economy, business, and infrastructure. I'm Olaitan Adebayo. Be sure to stay vigilant, stay informed, and stay ahead of the market. See you on the next one.